So we absolutely have to talk about this major concern in regards to Tesla stock that I believe a lot of individuals might have overlooked recently. Now, I do want to encourage you guys to watch this video in its entirety because in the beginning of this video, we're going to go ahead and talk about this major recent concern. However, towards the end of this video, I want to go ahead and share my overarching views in regards to Tesla. Now, recently, Tesla released this annual impact report, which I encourage you guys to watch because it has a lot of great information in regards to what Tesla is doing to reach its mission for sustainability and what it's doing for the environment. However, something that a lot of individuals might have missed was something that Bloomberg actually pointed out in this article right over here, highlighting how Tesla omits goal to make 20 million cars by 2030 from report. And look, I know a lot of individuals are gonna say, but Justin, this is not a sales report. This is a impact report. In fact, it's already been discussed on X with some of the Elon Musk and Tesla stands like Holzmore's catalog share how what a dumb headline. This is a sustainability report, not a sales forecast. And while I do agree with that narrative, the problem is we've had these figures in previous impact reports. In fact, if we just look at last year's report, we see that on page 64, it says how making EVs more affordable, and one of its goals, it says, is that it's going to build and deliver 20 million vehicles by 2030. Now, this was last year's report. But the main reason why this is honestly something that you want to raise your eyebrow for is because at the end of the day, Tesla's car business is a vital part of the business. In fact, I recently shared this chart over here that I made highlighting the percentage of Tesla's revenue from automotive sales from the last few quarters. Now, we see that recently it makes up about a little under 77.5%. However, if a company is a little under 77.5% of a company that makes most of its sales from selling cars, in my book, it's still a car company. Now, going back to this chart, we see that yes, it has declined quite a bit. And I know a lot of individuals will argue how this is good. And in fact, I do agree with them. That's good. We want to see Tesla not have to rely on automotive sales and eventually rely on other services and other products. However, recently, this decline isn't that huge of a decline from its peak close to 82%. We went from 82% of a car company to 77.5% or a little under that. And so it's not a huge difference. And by the way, I'm not making these numbers up, on this little pretty graph. If we take a look at the statement of operations, we see that car sales still make up a majority of Tesla. And the only reason why car sales kind of declined as far as the percentage of revenue is mostly because we're in this environmental setting where, of course, high interest rates makes it difficult for people to purchase cars. Of course, most people don't buy a car in cash. Most people finance a car, and if interest rates are high, well, that's obviously going to be a challenge for any automaker. And so we know this, and that's why we already anticipated in prior videos how this was going to be a challenging earnings report for Tesla. And one of the things we have to understand, again, looking at the statement of operations, is that yes, it is good that when we see this data, we see that yes, car sales came down, which is a huge bulk of its revenues, but luckily we kind of stayed around that same area in terms of services and other revenue. And so that's good, that's great, because we want Tesla to kind of lean more into the future in regards to other services and products because it's less volatile, right? The car industry is kind of something that's at the whims of the macro, environment, right? The macroeconomic climate, right? If interest rates are high, well, it's challenging to sell cars, but luckily services aren't as volatile. And so that's a good thing. And so, of course, that's something I want to point out. But still, we are at a point in time where we are seeing that automotive sales still makes up a bulk of the company's revenue. Now, of course, Tesla omitting this from its impact report could be one of two things. It could either be that Tesla is kind of giving up on its goal of 20 million vehicles by 2030. We don't have any confirmation of this, but that's something that one can assume, and that would be really bad for Tesla. However, the other view is that perhaps Elon Musk and the team realize that, hey, maybe this information does not need to be on a report, and hopefully, fingers crossed, that is the case. However, in this video, I want to go ahead and hop into my laptop and also just cover a couple of other things that are concerning with Tesla, and then also talk about why, although Tesla stock right now, I've been kind of bearish on it for, since December 28th. We'll talk about that. Well, I'm still optimistic for the future. So let's go ahead and hop into my laptop and talk about it a bit further. All right, so we are officially in my laptop taking a look at the price action for Tesla. And I want to go ahead and delve into this a bit further because I think a lot of individuals get my stance on Tesla confused. And I know it could be confusing, especially because I was ringing the alarm. I made several videos, it started back in December 28th, stating that Tesla was overvalued from a fundamental perspective, a technical perspective. And so indeed, I was correct. We did see Tesla fall down, but I think a lot of people saw me or saw those other videos and they believed that I was shorting Tesla or I was perhaps selling Tesla. But the truth is, I simply wasn't buying more shares of Tesla. And so that's something that I think a lot of individuals got confused. Just because I was bearish on Tesla during this time frame, I was just ringing the alarm stating that I am not buying more shares as I believe it's going to fall down. But I still hold Tesla within my portfolio, though the percent of Tesla in my portfolio has definitely been dwarfed because I've been adding into my long-term portfolio with other names. The reality is I'm still optimistic for Tesla in the long term, and I want to go ahead and share a couple of reasons why. And so again, I haven't been selling shares and I don't plan on selling shares of Tesla, although if I ever do, I'll provide an update. But pretty much I just wasn't buying. And then after the earnings, I ended up buying a small bit, but it was very minuscule. And for a while I've been saying, look, Tesla's around this area where there's a lot of volume relative to price. I don't see anything major taking place, as we're going to see consolidation. And that's exactly what we've been seeing, kind of just up and down days. Nothing crazy, no more huge moves, because again, we're not in a low volume relative to price area where we're going to see one specific section, whether it's the buyers or the sellers, dominate. And so until we break out of this kind of sideways range, nothing exciting is taking place. But of course, there are a couple of additional risks that I've touched on before. For example, I've highlighted, and I'm not going to belabor it further in this video, but we talked about Elon Musk's pay package, and of course, Elon Musk threatening that if he doesn't get this package, he will be spinning off some of the AI and robotic developments into separate companies. I don't think that's likely to happen, but what's interesting is we're seeing, of course, and this is a headline that just came out, where this firm, Glass Lewis, right, I believe it's Glass Lewis & Co., and they're actually putting out content stating that people should reject Elon Musk's pay. Now, of course, I already shared my stance on it in the comment section of a previous video on what my stance is in terms of Elon Musk getting paid or not. Again, everyone's entitled to their own opinion. But what's very concerning about this is we're seeing large firms, we're seeing large retail investors all saying that they're voting against it. And we know this is huge and important because in the previous video I've highlighted how Tesla is even spending advertising dollars convincing people to vote and showing people how to vote. And so that's huge. And the reason that's huge is because Tesla doesn't really advertise for its cars. So for Tesla to advertise for Elon Musk to get his package, that means that they really want this to go through. And of course, there's that threat of Elon Musk spinning it off to another company. Now, of course, we're not going to go ahead and touch on that any further. We talked about it in a few previous or a couple of previous videos, but I wanted to just highlight that we're getting more bad news. And of course, it's kind of like burning money. Tesla is spending money on advertisements, suggesting for individuals to make the vote for Elon Musk to get paid. But we're having a lot of people attack that idea. But let's go ahead and move on. We want to go ahead and touch on Tesla from a fundamental perspective as well. We'll go ahead and touch on that. But I also want to share this tweet right over here. This was a recent tweet Elon made, him playing Diablo, I believe that's 4. And I say this because I'm not a gamer myself. But, a lot of individuals have been getting upset at Elon, stating that he's been putting too much emphasis on X.com and not really focusing on Tesla as he once was before the acquisition of Twitter. And of course, I somewhat can see that narrative, although I don't think that Elon Musk just posting himself streaming a video game means that he's not paying attention to Tesla. I know if you look in the comment section, people are saying you're not focusing on Tesla, but you're
you're playing video games. And I here's my kind of like answer for that, right? I think all CEOs are not 100% focusing on their company. I just think that Elon is more in the public light because he's constantly making his opinion known. I'm sure Jeff Bezos is out there enjoying amazing yacht parties and doing crazy things on that yacht, but he's not posting about it, he's not talking about it. And so none of us are ever saying, oh, well, Bezos is not focused on Amazon. Well, it's because he's not giving us that perception. So I do believe that, just playing a little bit of video games over the weekend, it's not a huge thing, but of course that's just my opinion. You guys can let me know in the comment section below. I do think slightly there's been some deviation on the focus on Tesla, but again, I don't think Elon Musk playing video games over the weekend is something that should be a huge concern. I'm sure all CEOs do something to relieve stress, and they're not 100% focused on the mission, right? So that's just kind of my opinion. Maybe it's biased because I do still have shares of Tesla, but just wanted to share that. You guys again, let me know. But going to the fundamentals, right? So and we'll touch back on the price action over here, but fundamentally, one of the things that's pretty interesting, and this is something that we have to understand, no matter what type of analysis that you do, regardless if it's technical analysis or even fundamental analysis, it's very subjective on how you interpret the data. And the reason I say this is because when we look at a price to earnings, ratio over here, we see that, look, Tesla is a bit overvalued. And of course, first off, when something has a high price to earnings ratio, that just means that people are paying a high premium, a high multiple for this company. And we see in videos like that. Now, some people may pay a higher price now because they believe that it's going to go much further. And so just because something's high doesn't mean that a high multiple means that it's overvalued. It can mean that it's overvalued, so we can interpret this as Tesla's overvalued from the constituents in the Magnificent Seven, or perhaps people are very bullish on the future. Now that's, again, it's just, there's a lot of, it's subjective on how you interpret that. However, something that is interesting is that when we look at Tesla from a price to book ratio, which is completely different, we see that Tesla is actually doing fairly well. Now, for those that don't know the difference, right, of these financial ratios, both ratios provide valuable insights, but different perspectives. And the price to book ratio is kind of more asset focused, and it's suitable for just understanding the tangible value of the company, while the price to earnings ratio essentially is just focused on the earnings, which is suitable to kind of see, well, where the growth potential is. Now, of course, you're going to want to use different types of financial ratios for different types of companies, but one thing that I see when I look at Tesla, and again, everything's subjective, this is just my thoughts on Tesla, is that yes, we are paying a bit of a high multiple, and I do think that Tesla is slightly overvalued, especially when you look at different financial models. But the good thing about Tesla is that it has a strong, healthy foundation. It has like kind of a good base when we look at the price to book ratio on its assets, right? Its assets and liabilities. And so to me, I interpret this as maybe Tesla is in a bad, or not maybe, but definitely Tesla is in a bad macroeconomic environment where interest rates are high, people are not buying cars. I mean, we see consumer confidence, people are exhausted, people are not buying new vehicles like they once were. However, Tesla has a good, healthy base for investments into other areas like services or other products like the robotics section, which I'm very optimistic for that. I shared that in previous videos. The AI section of Tesla, I am skeptical. I mean, we are seeing improvements, but I think that's going to take a long time simply because of the regulatory hurdles, but that's just a different story. But again, Tesla, I think in the future, and again, this is just my opinion, I believe that it's primed to do well. However, there is that risk that if Elon Musk leaves, well, maybe he may, and we're already seeing signs of him hire Tesla employees for his other company, AI. So again, if Elon leaves, well, maybe the vision for Tesla to succeed in the robotics space may vanish, and that would be horrible. But as of now, just assuming Elon Musk is staying with the company, this is good. This is pretty bullish. Now, going to a technical term or technical view, again, I've stated a copious amount of times that things are just pretty much moving sideways. We're going to want to pay attention to June. Of course, we're going to have some other macroeconomic data points coming out. For example, this week, we're going to have the PCE report, which is an inflationary gauge, and that's going to be a huge driver for the broader markets because, of course, we want to see any signs of inflation trickling away or fading away. And seeing, and just to confirm, when I say fading away, inflation is much higher than the years prior. What I mean is that the growth of it is trending downwards, because I think individuals get that mixed up. But we want to see the growth of inflation trend downwards to highlight maybe the possibility of the Federal Reserve cutting rates and then once again bringing Tesla back into a favorable environment. But again, there is a lot of risks taking place, and that's why I'm just not buying Tesla. I'm buying a lot of other stocks, adding to my long-term portfolio, and then in the swing trading account, we're also not even really trading Tesla. We're trading everything else but Tesla. Which, by the way, if you want access to the Push and Profit private group where I share my daily briefings every day the market is open, as well as my trade ideas, it's going to be the first link in the description below. Make sure to check that out. And by the way, if I haven't said it already, make sure to subscribe to the channel so that you don't miss out on any future upload. And before you guys go, make sure to check out this video right over here, and I'll see you guys on that next video. Take care, guys.